over Brighton in England. It's now time to turn our attention to South Africa, where we now go to Johannesburg, and it's a recording this week of our good friend George, who's also a member of the Monday Trading Buddies team. See you tomorrow, mate.
See you tomorrow, guys. Bye-bye.
G'day to George.
Hi guys, my name is George Nyabadza. For those who don't know me, just going to talk to you briefly about what we discussed during my show, which is Wednesdays and GMT time. Remember, GMT is not always London time because of all the time changes. So GMT 9:30 to 10:15. My local time in South Africa, that would be 11:30 to 12:15. So briefly, two very important things that we focus on: price action. Now we are price action traders, and the only things that we have on our charts is the 10 EMA and the 20 EMA. 10 EMA we use to indicate the breakout part of any trend, and 20 EMA, that's when we're trading for our pullbacks to the 20 EMA. We trade off the 5-minute chart, but we use the daily time frame to find the areas where we want to jump into trade. Now, for those who have followed the show, you would have known that I use a lot of measured moves, areas where price is likely to react, bounce, break out, whatever the case may be, to show me potential areas to jump into the trade. My primary wealth extraction strategy is what I call the R2.3 reversal into 2 to 3 days of a trend. So something like that would have been a perfect setup to go find entries on the 5-minute time frame and see if we can ride it as far as we can and extract as much wealth as we can. That also could have been a good point. So we want to jump into a trade here and take out as much as we can of wealth from the market as far as we can. If we don't get it there, well, there'll be pullbacks to trade along the way. Another favorite chart of mine is S&P 500. That was the euro versus the dollar. And if you ever look at where we are now, I mean, just look at the chart, trading range area here. I spoke about the market trying to break out to a new high towards the end of last year and kind of failed to do that. Now we've broken beneath that trading range and entered into a trading range. There's a lot of information from this measured move tool that we use. So we are in a trading range. What I'm looking for example, is an attempt to break out of that short trading range somewhere within here. Look for my R2.3 strategy and trade it down. So in terms of how we trade, price action is one part of it. The other part of extracting wealth from the market is money management. Now, money management is not just saying I risk 1%. Let me break it into two parts, and then let's see where I take my profits out. But money management goes a little bit deeper. You have equity that you start off with, and you know how much of that equity you want to risk. Okay, 1%, 2%, etc. But then at some point, you need to determine when are you going to go beyond 2%? When are you going to go to 3% or 4% on the total equity? Okay, managing your risk so that at any given point in time, if you are stopped out, you never lose more than what you initially set as your comfort level, 1 or 2%. That's on the total equity. The other part of it, of course, is when you are in a trade on that very day, when that initial 1% is now 2%. How do you go from that so that on the next trade, on the day, on the same chart, you now put in 3%? Because if you lose on that 3% minus 3, you've already banked 2%. So it's still within minus 1%. And if you manage it and the day is going your way, which it always does, 100% of the times, Geoff's going to laugh at this, I'm always right 100% of the times because of the strategies that I use, which ensure that at any given time, the hat I'm wearing tells me whatever I'm doing, there's a 60% chance of success. So I'm 100% right 60% of the times. And once I know that, then if I've banked 2%, happy to put 3% in. If I minus 3 on that trade, I still only minus 1, and I can keep going ahead. If I've banked 3% and manage it with my stop loss, I'm comfortable with money management to go and risk 4% or even 5% on a trade. If I lose on that on the day, I'm just out -2%. So guys, this is what we talk about. I'm out at a resort, so enjoy the greenery. But we will catch up on my shows, live trading profits, which are every Wednesday, GMT time, 9:30 to 10:15. Anyway, I'm going to go enjoy the resort. And by the way, 29th Jan, it's my birthday.
Happy birthday to George from yesterday, of course. It was the 29th yesterday, and I think he turned 40, just 40-ish. Thereabouts anyway. 100% right 60% of the time. I love that expression. I love that expression from George. And I pulled him up on it. He got it wrong last week. Not the calculation, but he expressed it in the wrong fashion. He got his tongue tied around it a little bit, and that's why he was referring to me laughing at him. Don't laugh at George. He's a great guy and can trade his